On this episode of the Property Corner, we're going to be chatting about interest rate changes that have happened in 2024, what effect that's had on your mortgage installments, and then also what to expect for 2025. Welcome to the Property Corner with myself, Rowan Alexander. So recently, 21st of November, the South African Reserve Bank reduced the prime lending rate, or the repo rate, which has an effect on the prime lending rate, downwards from 11.5% to 11.25% prime. That's had an effect on your debt repayments, and I'm going to be looking at it specifically in terms of mortgage loans, what that means, how do we quantify this, how do you calculate how much you're going to be saving, and then also maybe how things are looking for the year ahead and what effect it's had on the market. So the first thing, let's maybe have a look at the South African Reserve Bank, the historical rates. So if we look from the 1st of January 2024 to the 22nd of November, that's just after the interest rate decision, you'll see that the interest rate or the prime lending rate sat at 11.75% from the start of the year up until that first reduction that we had on the 19th of September. It was the first time there was some relief. It was 25 basis points. So prime lending rate came down from 11.75 down to 11.5%. On the 21st of November, it was once again reduced by 0.25 and it came down to 11.25%. So that's where we're sitting at the moment. And I'm going to show you how to calculate how much money you're going to be saving on your mortgage installment. So to do that, I'm going to use the Mortgage for You bond repayment calculator. And let's try and quantify this in terms of a R1 million loan. It makes it easy. If your loan is sitting at R1 million, this would be the most sort of accurate figure. And if it's sitting at 1.5, 2.5, 3, 5 million rand, you can simply multiply the savings factors that we are calculating, and it will help you understand that. As you know, making this sort of content isn't easy. We wouldn't be able to do it without the support of our local partners and sponsors. This episode is sponsored by Mortgage for You, a mortgage origination business based in Cape Town that does mortgage bonds right across South Africa. Mortgage for You has been integral in the growth of our business. They've helped us with all the expats from abroad looking to finance property in South Africa, and also assisted our local clients for the past 10 years. Their service is unrivaled. Mortgage for You can assist you with a pre-qualification and also the formal application to the banks. It's always good to get involved with a mortgage originator very early on in the process so they can understand your financial position and make recommendations prior to lodging an application for mortgage finance. Hop over to www.mo4u.co.za to check out their website. You'll find different cost calculators there that assist you in calculating your affordability, bond repayments, transfer costs, and there's also the opportunity to reach out to Esme Leroux, who's the head of that business that will assist you personally with all your mortgage needs. So thank you to Mortgage for You for supporting our channel and for sponsoring this episode. So if we look at the start of 2024 or prior to September, your interest rate would have sat at 11.75% on a 20-year bond. Repayment on a R1 million loan would have been 10,837 Rand a month. If we look at the September to November period when the prime rate dropped to 11.5%, that was recalculated at 10,664 Rand, which makes a difference of about 170 Rand a month. I think 171 Rand to be exact, but 170 Rand a month. So for every 0.25 basis point reduction, you should be saving about 170 Rand a month on your installment. So likewise, if you see a 0.5% relief, you could expect 340 Rand a month reduction in your mortgage bond installment. So we said it was 10,837 at the start of the year, and looking at that today at the prime rate of 11.25, it comes down to 10,493. And again, that's about 344 Rand change in your mortgage installment. So if you want to quantify it, easiest way, every 0.25% change makes 170 Rand difference per 1 million Rand. Remember that this is only applicable to home loans, meaning that you can apply these ratios to home loans. When applying these to vehicle finance and things like that, just be mindful of the way that those premiums are calculated. While they may be the same, there may be some variances depending upon how your loan agreement is structured. In residential property terms, it's pretty standardized, so it's easy to quantify this. So looking forward, what do we foresee for the rest of 2024 and then looking into 2025? The interest rate reduction, especially this one in November, was maybe less than what most analysts were hoping for and predicting. I think there was some people holding their breath that we would have seen a 0.5. But the good news that's come about is that the inflation is well under control. So whether we see a additional 0.25 early next year or throughout that course of the year or a early 0.5, it's definitely starting to have a positive effect on the market. As with these interest rate changes, they don't have an immediate effect. The wheel does turn slowly, and the immediate effect is the one of sentiment. So your buyer confidence, your homeowner confidence, that has an immediate effect because people their sentiment towards doing business changes. The financial effect may be smaller and less significant, but the confidence that's installed by the changes in these rates and the fact that we are beyond the peak of the cycle, that's where their confidence is coming from. That's where the true value lies in these moves. Yes, there's a lot of people that are looking for large parts of the market that are looking for these reliefs from a survival perspective. We've seen, as we've reported on previously, that clients in arrears are up from a long-term average from 4.5% to 5%. Mortgage in arrears have gone up to 7.8%. And likewise, the long-term average for people selling their homes due to financial reasons, the long-term average sits at about 18%. That's up to 23%. So definitely more pressure on the home owner. But we'll see that going into 2025, we might see sort of an overrun of these figures where these figures do still peak. When I'm talking about the figures, I'm talking about the arrears, the percentage of homeowners in arrears, and also the percentage of sellers selling due to financial reasons. They may still overrun. Once the interest rate is reduced, that doesn't solve all their problems. But I think in the long term, that peak might overrun the interest rate cycle, but definitely towards the later half of 2025, I think we'll start seeing recovery in some of those sections where your arrears figures start looking better, as well as people selling for financial reasons, I think will start also looking better. Just remember that while you have these savings on your mortgage loan, any other form of debt, you also have savings on. So 0.25 might seem insignificant, but if you take a cumulative 0.5 since September up until now, it's 340 odd rand per million rand. So on a 3 million rand bond, it's 1,000 rand only on your home loan. If you have vehicle finance, short-term credit, personal loans, all of those things are affected. So the cumulative effect could be quite substantial. The last thing that I'd like to chat about quickly is what is more of an encouragement to say that if you have been able to afford and if you've made lifestyle changes to cope with the higher interest rates and you've become accustomed to it, make the effort, and if you can afford to, pay the extra installment or the higher installment on your mortgage bond. Using the Bond Gallery amortization calculator here, just to show you, remember we did the previous calculation where we said at 11.75% per million rand, you would have been paying about 10,837. And on the new interest rate of 11.25, that installment comes down to 10,665. There may be 1 or 2 rand difference, usually due to rounding, in the different formulas. But effectively, from the start of the year up until now, 300 and odd, it should be about 340 rand, 320 rand difference. Now, I've taken the difference in the installments of 344 Rand and loaded that as an extra payment to show you the effect that that would have on the period over which you repay that bond. So comparing start of the year or up until September, when you would still have been paying 10,800 and odd, and having the reduction down to 10,666, call it, and adding a 344 Rand extra payment. So effectively keeping the payment at the equivalent of the 11.75 rate. Have a look. A 20-year bond gets repaid after, let's have a look at where this ends, 216 installments. So that means that your bond term is shortened from 240 months to 216. That's a 24-month difference by simply repaying the additional 344 Rand a month. You shorten the loan term by 2 years. That's massive. You know, and as time goes by, it may be easier to make these additional payments, as the time value of money diminishes, as your financial circumstances change, as more relief is granted in future. You may be able to continue this, but I just want to show you the power. Even if you can't do it now, put this in the back of your mind. Look at the effect that paying even a 300 Rand a month extra onto your bond has. The long term, it could potentially reduce your term by 2 years. So I hope this episode has been useful. It's maybe showed you how these calculations work and maybe stimulated some thoughts and provided some encouragement for you to make those extra payments on your mortgage loan. Hope you've enjoyed it. Stay tuned to the Property Corner with myself, Rowan Alexander, for more of the latest property market trends, news, information, and some insights.